Beste pensioenfondsen, jullie gaan zo kijken naar onderzoek dat Neurensics voor jullie heeft gedaan. Over het lastige vaarwater waarin de pensioenwereld zich op dit moment bevindt en over hoe je daar het beste met de deelnemer over kunt communiceren. Ik ben Victor Lamme, een van de oprichters van Neurensics, maar sommigen van jullie kennen me misschien beter van een van de lezingen die ik voor veel van jullie heb gegeven over pensioencommunicatie. En over hoe je daar met de bril van de hersenwetenschappen en de psychologie vaak net even iets anders tegenaan kijkt dan jullie misschien gewend waren. Ik denk overigens dat het belangrijk is dat we ons blijven verdiepen in wat zich nou precies afspeelt in het hoofd van die deelnemer. Wanneer we het hebben over zo'n ingewikkeld onderwerp als pensioen. Wat voor onzekerheden en emoties daarin ontstaan. Zeker nu natuurlijk alles op de schop gaat. En hoe je die emoties kunt ondervangen met precies op het brein van die deelnemer toegesneden communicatie. Misschien leuk om te weten, we zijn zo'n 2 jaar geleden bij de Universiteit van Amsterdam gestart met een nieuwe masteropleiding over dat toepassen van hersenwetenschap en psychologie op allerlei maatschappelijke issues. En natuurlijk is pensioen er daar één van, al was het alleen maar omdat ik dat een razend leuk onderwerp blijf vinden. Misschien leuk om even te kijken naar een filmpje wat daarover gaat. Dat gaat over hoe zelfs de meest basale kennis uit ons vakgebied eigenlijk heel relevant is voor wat zich nu allemaal afspeelt in de pensioenwereld. En dan wens ik jullie daarna heel veel plezier met de resultaten die Vladimir jullie zal laten zien.
The Netherlands has a pension system where saving is mandatory for everyone with a job. Both employer and employee contribute. This has the huge advantage that it overcomes the all-too-human tendency to postpone saving until it is too late. Voluntary saving for a pension usually fails because our brains value future rewards much lower than current benefits, a phenomenon called delay discounting. For example, if given the choice between €1,000 now, or €2,000 in 3 years, most people will prefer the 1,000 now. This has been supported by functional MRI scans that show that future benefits evoke much less activity in reward circuits of the brain. Moreover, delay discounting is even stronger in young people, explaining why young people have little to no interest in saving for their pensions. Mandatory pension saving, therefore, is to their benefit in particular. However, there is increasing opposition against mandatory pension saving. One of the major reasons is that pension saving has become much more insecure. It used to be that at the age of 65 you would receive 70% of your last earned wages. In the years 2000, this changed to 70% of the average of wages over your working years. For most people, this implied a lowering of pension income. And then things started to move really fast. First, the age of pension increased to 67. But shortly after, it became life expectancy dependent, implying an even later, but uncertain, age of pensioning. Future payments also became insecure. Pension funds were obliged to much more transparency about the risks pertaining to the assets they held. This required them to communicate low, medium, and high scenario outcomes to contributors. In short, both the age and future payments of pensions became very uncertain. Strangely enough, governments and central banks expected this uncertainty bombardment to incentivize people to better plan their financial future. But it resorted the exact opposite effect. People turned their backs on everything related to pensions. This is no surprise, given that people generally don't like risks and uncertainties. Classical experiments by Tversky and Kahneman show that when given a choice between a certain $250 or a 25% chance of $1,000, which also has an expected value of $250, people overwhelmingly prefer the certain $250. This is a cognitive bias known as risk aversion. So, when pensions became a lottery, rather than a surefire saving for a rainy day, some upheaval was to be expected. Pension funds typically triple the deposits of employers and employees with their diversified investment strategies. However, communicating ever lower and uncertain future payments gave the impression that capital was lost rather than gained. Pension funds were blamed for squandering the money of workers. Things got even worse when interest rates started to drop below zero. This didn't so much affect the investments of the pension funds, because lower rates typically imply higher returns on stock market assets. But it had a huge effect on the calculation of future obligations towards pension holders. This implied that the level of coverage dropped below 100%, increasing the possibility of cutbacks on current and future pensions, or forcing funds to increase the contributions that workers must pay. So, things got more uncertain again. Government, central bank, pension funds, and unions saw only one way to stop this negative sentiment spiraling ever further down. A major overhaul of the pension system is planned. Will that succeed? That obviously depends on a lot of factors. But from the perspective of societal support, the new system will only work if it can enjoy a much more positive sentiment. Psychology and neuroscience teach us that this requires at least 3 conditions to be met. 1. Saving for pension should remain mandatory. If left at the whims of free will, delayed discounting will make sure that most people, young people in particular, will only start saving when it's too late. This is a pattern that is seen in many countries where saving is optional, and also in the Netherlands with the so-called ZZP'ers, a group of workers that operate as independent entrepreneurs. 2. The uncertainty bombardment has to stop. A continued perception of risk and uncertainty will be fatal for the acceptance of the new system. Reality of financial markets make it hard to fully guarantee future payments. But still some effort must be made to give contributors some sense of security. An option would be to apply what Daniel Kahneman calls pseudo-certainty. This entails that any risky proposition can always be split into a much less risky part, and a riskier part. This would allow to communicate pensions as a guaranteed minimum, to which a potential bonus will be added. Although inherently the same, such a pseudo-certain proposition is perceived as much more positive than naked uncertainty. 3. Much more focus should be on the benefits of pension saving, which are too much hidden away in pension communication. Research has shown that at an unconscious level, people tend to associate the word pension with very negative words like illness, poverty, or death. To counter this, more positive associations have to be generated. An example could be to associate saving for pension with the buying and paying for a home. Future home ownership is valued very highly, by young people in particular. The most important benefit, however, is that pension funds are able to generally triple the money that employees and employers contribute over the years. If seen from the perspective of employee contributions only, the multiplication is about tenfold. Much more focus on this mountain of gold that is piled up for you when you save for pension is warranted. This should replace the focus on future monthly payments, as these typically are lower than what workers earn now. It would also be beneficial if somehow the amount that is saved would be presented as a pile of money that is really yours, instead of belonging to an anonymous community. Finally, it should be perceived as money over which you have some level of control, for example by allowing some flexibility on how it is spent. These conditions are of the utmost importance to regain trust in the pension system. If not met, societal and political support will crumble ever further. Which would be a real shame, because the Dutch pension system is one of the best worldwide.